3 undervalued stocks that you should buy hand over fist. Now, I define an undervalued stock as a company that has similar growth potential compared to its industry and something that is combined with a low trading multiple, again, compared to its industry and compared to its own historical ratios and multiples. And kicking us off at number 3 is Ford, ticker symbol F. Ford's PE ratio is 12, which is pretty average compared to what they've typically traded at. But if you take a look, it has spiked higher than 14 a couple times before. And something to keep in mind, something very important, is the average PE ratio for auto manufacturers in the United States right now is 6.5. So Ford is trading at a multiple double the industry. And at first glance, that definitely does not appear undervalued, being, trading at twice the multiple as the industry. But if you take a look at their revenue projections, the picture starts to look a little bit better. Their EPS is expected to grow at about 14% per year, whereas the industry is looking to grow at about 12%. And the auto manufacturing dividend the dividend yield is only 0.71, whereas Ford's is a healthy 4.6 right now. And Ford, obviously, strong dividend track record. And so, growth potential considered, dividend, even though its valuation is definitely not a bargain at twice the industry, it starts to look really, really good in Ford's favor when you take a look at the fundamentals, what's under the hood, and you take into account those future growth estimates. Kicking it off at number 2 is Alibaba, BABA. I guess it's not kicking it off, is it? Following up Ford at number 2 is Alibaba. Their PE ratio has historically been a lot higher than it is today. If you take a look at the chart, their PE ratio was really, really high not that long ago. It's crashed down and is showing signs of a little bit of recovery if you take a look at their PE over time. And I think they're sitting at 16 right now, 15.9, which is, again, incredibly low for Alibaba's historical valuations that we've seen in the past. And currently, the PE ratio for tech companies is around 30. So Alibaba is valued at around half the average tech company by that metric. And the earnings for the S&P 500 IT sector, which Alibaba falls in, have grown around 11% on average, TTM 2023. And while revenues have remained mostly flat during that time, but Alibaba is actually expected to grow at around 11% going forward. So that's pretty average. It's pretty in line, again, with the S&P 500 IT sector and portfolio. But I mean, combined with their historically low price to earnings, that's half of what the sector is. It makes this stock definitely look like an attractive option for value investors. Kind of the opposite of Ford, where Ford has, double the valuation, but really good earnings. Alibaba has similar average earnings to S&P 500, but is sitting around a half that valuation. So, like I said, I think that's a very attractive option for value investors right now. But number 1 undervalued stock that I think you should buy hand over fist, and I actually have shares of this as well, is PayPal, PYPL. PayPal's PE ratio is 17.25, and like Alibaba, it's historically trading very, very low for their PE ratio. Again, if you pull up that PE ratio over time, you're going to see their valuation hasn't been this low in a long time. And it's about half of the average tech company PE right now as well. Again, with the average sitting around 30 for the S&P, in the S&P anyways, the S&P 500. And PayPal's EPS growth rate is expected to be around 7% per annum, which, yes, is less than the industry average that we talked about at 11%. But PayPal does have a reliable history of beating EPS estimates. If you take a look at their last earnings calls, it's very, very rare that they miss on an earnings call. And that gives me a lot of confidence that they're going to continue to do so going forward, even though they've recently lowered their revenue estimates for 2024. And again, I think that makes this a very, very attractive option for value investors like myself. And so there you have it. Ford, Alibaba, PayPal are my top 3 undervalued stocks that you should definitely take a look at and consider adding to your portfolio. So please do not forget to drop a like for the algorithm, really helps out me in the channel, and I will see you next video.